What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 17th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, we're going to be talking about a set of macro events that could either make or break Bitcoin here in the short term in the next 24 hours. And it's an event that many people aren't looking out for, as they're rather focusing on the more well-known events in the macro sphere. So we're going to be talking about what this event is, what to look out for, and all that you need to know about the upcoming potential price action. We've got a lot to discuss. Let's go ahead and kick things off. So as you will already know right now, Bitcoin has been slowly fading down here over the last few days. Nothing too severe, but day by day, churning down about a quarter to a half of a percentage point in returns. And again, after coming up towards relative highs here on August 15th, as far back as June of this year. But now we're starting to see the RSI and other types of momentum indicators signaling signs of uncertainty, potential opportunities for a trend reversal. But we haven't seen anything prematurely bearish yet that confirms we're going to move down. So we have to keep neutral here. Why is the market on standby? Why is it that Bitcoin's doing this? And not just Bitcoin, Ethereum, the broader crypto market, and even equity markets are starting to go more sideways over the past few days across the major indices. Well, the big reason, it has to do with a major calendar event the market has been waiting for here on Wednesday, August 17th. It's not only that we've got a lot of great data coming out around mortgages and financing rates, as well as retail sales, but we've got two very important minor events that are tied together. We have a speech from Michelle Bowman, who's one of the Federal Reserve members. And on top of that, we've got later on, at the close of the market, a little bit after, we're going to have the FOMC minutes. Now, these two events here are going to play a pivotal role. Now, Michelle Bowman is going to not only be speaking on behalf of the Federal Reserve about the direction of monetary policy, what the Federal Reserve is thinking, but on top of that, the FOMC meeting minutes, both of which are going to be giving a lot of details about what might be coming here as we go into the next FOMC meeting in September. That's what everyone's wondering about right now. And while many people would think that the market is only going to start pricing this in when we actually get to the decision, these hints that are going to come from what Michelle Bowman and the FOMC meeting minutes are going to tell us, they will start to be priced in to the market. Smart money, the bond market, is going to pick up what is being told here and start to adjust accordingly when it comes to valuations. Now, this is very important here to understand, because Michelle Bowman, again, is speaking on behalf of the Fed here today. And we already have some hints from just a little over a week ago here on August 6th, where she had stated that more 75 basis point hikes should be on the table. And if she comes out confidently with this more hawkish remark about how the Fed is just going to continue on pace, that we are not going to be seeing a pivot in the Fed's adjustment to monetary policy, they are going to continue the course forward, that could be a major negative for equities, which seem to be pricing that in, considering commodity prices, especially in the energy sector, have started to reduce or continue on their downtrend. That could be one key sign here to look out for. Now, on top of that as well, we've got the FOMC minutes here. And while we don't know exactly what to look out for until they are reported, we should understand that we are going to get some kind of outline, even though if it's not in plain English, about whether or not the FOMC, next FOMC meeting is going to mean that we stick to the 75 basis points. Is the Fed looking to pivot after that meeting, or staying the course as is? What we got from the last meeting is that Jay Powell said that they're going to go on a meeting by meeting basis, which again, it gave us this really positive sign in markets. That basically was, I think, the meeting that confirmed the lows in the market and gave us this room for the relief rally. It was this pure statement of saying we're going to do it meeting by meeting. We're going to see how the data is coming out. But in reality, the Federal Reserve is signaling so far that it is staying on course here. And I think what the market has started to do is it started to price in off of those sly comments that Jay Powell's made that now they're going to start to adjust it here. So if there is a continued statement here that they're going to be sticking to the 75 basis point increases on the federal funds rate, continuing to push us up into well above 3.5% here going in to the next meeting and beyond, And on top of that as well, if they're going to continue quantitative tightening, I think this is another big dynamic that the market is wondering about here. If there is no adjustment to course, this could be a negative setback for crypto and equities. And worse off, if the Federal Reserve comes out stating that they're even considering higher rates, which I don't think is likely, that could be a very, very negative tailwind for markets. So there's a couple different scenarios that could play out here. But if you get any kind of easing on rates or on the balance sheet, that is going to give you enough relief to hold at a minimum sideways in valuations until that September meeting when things finally happen. Now, I do want to say, again, while I don't want to be biased, we don't know what's going to come out of these meeting minutes or what Michelle Bowman is going to specifically talk about. What we do need to consider here is that equities at the moment are quite overextended. Even if you're in the belief that the bear market is over and that we're going to continue higher here in the long run, just take a look here at the major indices. We've got the Nasdaq, which from the lows here back in around June 16th, we've come up all the way here about 24% to the highs here. A massive amount of returns here and over 41 trading days. Not bad if you can get it. But it's not just the Nasdaq. We also see the S&P 500 coming up and tapping its 200-day moving average, showing a lot of signs of confidence that the bulls are in the lead right now. Over 40 trading days. Blew through that 200 EMA on the daily and tapped into the 200 MA. And it's a matter of whether or not we can start to turn these indicators into support and clear through this line of resistance. If we can't do that, the bears are still in charge and we are likely going to be rolling over in valuations. What about some other indices here that we can take a look at? Let's take a look at the VIX. VIX here, which measures volatility for options on the S&P 500, has been continuing to trend downward here. And as we talked about in our Macro Monday special here, you really want to be careful as we get down in this range, because unless we get a breakdown through one of these lows here, signaling that again the bulls are in long-term control, we are now getting in to lowered territory here in the VIX. And while that sounds great, it means the volatility is low right now. Volatility doesn't remain low very long, at least within the past year or so. As we can see here, we've been making higher lows here within the volatility index since back in November when we had our peak of the market. So until we see a change in that trend, we cannot be too certain that this is a bullish sign here. Until we start treating, as we talked about in our last video, until we start really treating the 200 week MA and EMA as a point of continued resistance like it was back here, right? We could barely get any closes above this range. Until we start doing that, right, it's okay if we drop below here, because each and every time we've swung right back up. Every time we deviated here, we popped right back up and saw the VIX spike up into the upper 30s. If we get that again, that could spell bad news for equities, because increased volatility means increased downside in price. They move inversely. And again, taking a look back at these charts, right, this is the futures right now, so we haven't opened up for today. We haven't gotten those announcements from the Fed. We can see on the Nasdaq and at the S&P 500, all of them at some of the most overbought levels on the RSI that we've been at in months. They're in between these moving averages now, the 200 MA and EMA, and now this is really a point of contestment here as to whether or not we are going to be able to see equities hold through here if the market really likes what the Fed has to offer. All right, so this is a major event here later on today. We are going to want to look for hints in what Michelle talks about in her speech. And outside of that, take a look at how risk-on assets like Bitcoin are performing going into this meeting. Because Bitcoin is going to be a leading indicator here. And that's a really cool thing here to talk about, guys, as Bitcoin has grown into a much larger asset and has really started to have correlations with the macro environment. It has served as a leading indicator for risk-on and risk-off. And that's a very important telltale sign that we need to utilize when trying to understand whether or not going to cash is more preferable now, or adding to our positions and taking risk is the beneficial direction. All right. Now, I want to go ahead and take a look here at some quick updates on the side of crypto. One important index that I wanted to bring to your guys' attention, one of the data science models that I think is really telling here, is the Korean Premium Index. We're using our crypto data science tool, Crypto Quant. They're a partner here on the channel, and they've got a really interesting tool that I haven't been able to find anywhere else. Simply put, the Korean Premium Index although we didn't talk so much about Korea in this video, is a really telling indicator, because what it does is it takes the average market rate of Bitcoin, right? The price people are paying for Bitcoin in most Western markets. So you're talking about the major exchanges like Coinbase, maybe Kraken, some of these larger players. And it compares them in a ratio against the rate that is paid for Bitcoin in Korean markets. Now, the reason this is important here is that we have found really interesting correlations when there is a direct change in the premium that people are paying in Korea versus in other exchanges across the globe, right? So this could basically assume, as we talked about down here, that high premium values could indicate Korean retail investors are showcasing strong buying pressure. Now, usually that would be seen as a bullish thing. I mean, buy side pressure, it sounds great, right? But as we all know, retail traders, especially those who are going emotional and are starting to trade crazy premiums, expecting further and faster returns, are usually a leading indicator here of an upcoming correction, okay? So let's go ahead and just take a look at the chart here, right? We can see that a lot of the times when the Korean premium index here would spike higher, right? It would usually either be before decline or on declines here, where Koreans continue to pay that high rate here on Bitcoin. We can also see here as well that the Korean premium index was quite low here, actually negative for the most part, throughout the major part of this uptrend here, and only really started to get overinflated when we got into distribution or sideways territory here for Bitcoin. Same goes here on smaller time frames. We can see the Korean premium shooting up here as price is starting to go down on Bitcoin. And look at this, right as we're starting to churn up here, rather than turning negative on the Korean premium index, we're starting to see it slowly tick up higher here. Now, CryptoQuant, again, offers a whole range of really interesting data science models, from the net unrealized profit and loss, the MVRV ratio. All these things are starting to signal likely that we are overheated in the short term. That's why I lean a little bit more on this side that I wouldn't be shocked if we get a bit of a correction here. We've had a great relief rally. So many cryptocurrencies have rebounded and recouped a lot of losses. We had Ethereum up more than 120% in the past month and a half. We've had altcoins like Uni and Optimism start to really charter higher, making returns over 100, 150%. A lot of coins really offering some great gains in the short term. And not to mention, severely outpacing Bitcoin on average. We can see here again, as we talked about in our custom index here, our total 2 minus ETH, USDC, and USDT, all that dollar liquidity. And we can see that altcoins comparative to Bitcoin are really back where they were back here in the lows of March and May of 2022. That's definitely a great opportunity, again, to take advantage of here into the strength. And as we drew on our chart, just kind of as a mental model here, it's ironic, it's kind of playing out this way. We can see that we've had our secondary wave here, which doesn't have the same degree of momentum here as the first bump up, and that's to be expected here as we are in a risk-off environment. And we can see that buyers are not able to push this higher here to test one of those higher ranges. It's signaling that it might be ready to turn over and have a double bottom down in this consolidation range, which used to be resistance, now starting to act as support. And that's why, again, I say to take advantage of this altcoin strength. If you're more of a swing trader, this is not the time to be getting overtly optimistic. Even if you're a long-term investor, it's not the time to be heavily dollar cost averaging. You can do smart DCA, where you start to dollar cost average more heavier during periods of time when you can see the fear and greed index is flashing red. You can see people are emotional, and it's the times where it's the most difficult to build those positions that are usually the best to build those positions. In the times where you are eager and it feels easy to go make those buys because the market's just trending higher, that's one of the worst times to get optimistic, right? Again, we want to take advantage of these big swings. In other markets, that wouldn't be as true, especially when we're in a long-term cyclical bull market. But again, we have not got confirmation. We are in that right now. Now, as we see potential dips here in the market coming through, we want to look for valuable opportunities. And one of the plays here that I think is really interesting that you guys should keep on your radar, we've talked about them for the past couple of years, is Kava Network, which recently over the past few months launched its own official network, combining the impactful use of the Cosmos SDK and the Ethereum virtual machine. And as of recent, they just launched Kava liquid staking. So as most proof of stake networks allow you to stake your cryptocurrency and earn yield and maybe serve as a validator on the network, it is even more impactful. And I think one of the bigger innovations of proof of stake that's come out over the past few years is this concept of liquid staking, where you have essentially an IOU or essentially an S or B Kava essentially here, similar to synthetic ETH. Now this is going to allow people on Kava not only to stake their Kava and get yield, but on top of that as well, to be able to go and utilize that synthetic Kava essentially, or that B Kava, to be able to go out and utilize it within the Kava ecosystem to add TVL to DeFi applications, to swap it against other assets, all kinds of different things that you can do while also at the same time earning that yield on your Kava. And this is really exciting stuff here, being able to utilize it as collateral and really take it out there into the open. Now, for those of you who haven't been keeping up with Kava, Kava's had a lot of exciting developments from back in Q4 2021. They've been continuing to build out the development here, launching the mainnet here on January of 2022. And as they've been continuing to take it live here, they've launched developer programs. They've started to launch the integration of the Cosmos chain, so allowing people to deploy applications from both developer ecosystems and allow for liquidity to interact between those two different frameworks, which is really exciting, as Cosmos and Ethereum are two of the most active developer ecosystems, bringing in a lot of developer potential. But also here in Q3, with the launch of Kava 11, we are going to see a lot of exciting features. The main one being liquid staking, allowing you to essentially, again, get a token for your staked Kava and utilize it within the DeFi ecosystem, and a variety of other things, such as the Kava SDK, transaction sign in MetaMask, allowing you to have the convenience of utilizing MetaMask, which most people are familiar with, and the Earn Yield Optimizer. So if you guys are interested to take a dive into some of these details, I definitely recommend you guys read into their Medium article. They just launched the Kava Foundation as well, which is going to, again, be playing a pivotal role in developing a lot of the safeguards around Kava's development long term. I'll leave the links down below in the description where you guys can learn more, but let's go ahead and close off our conversation here for today, guys, as we're coming to an open here for the market today, as Bitcoin has gone through some pretty wonky price action here on the short term, where any potential move up is getting knocked down. I mean, this just seems like a repeat here. Any type of market buy side pressure and a potential breakout is being met with harsh rejection, high levels of sell side pressure on the order book, and market order flow that just pushes us right back down. This is a sign here of a risk off mentality, a concern going into this meeting that we might be in for a trend reversal. And again, with all the cryptocurrencies up as much as they are, and I understand it's very easy to get caught in that FOMO and think, but it's going to keep going higher. The merge is in. This is the end of the bear market. Truth be told, it's usually best to be cautious and go where the rest of the crowd is not willing to go. So anyways, guys, that's it for today. I rambled a good amount. If you enjoyed this video, consider dropping a like, consider checking out the details around Kava down below in the description, or checking out CryptoQuant if you want to get some data science metrics on the market. But if you guys enjoyed the video, thank you all so much for watching. I'll see you all in the next one. Take care, everyone.